Hey, good morning, everybody. Going to go over our Forex trades for today, Wednesday, January 13th. Pretty busy morning and night. We had four trades, so we're going to go over them a little early today. Wrap up the trading just to book the profits and set them aside. Not a whole lot on the economic calendar this morning, so we didn't have any additional trades. And even if we did, after the four trades and they were pretty decent. So why risk it? Like I said, no economic news to speak about. Goldman Sachs did come out with a research report. It was actually on Bloomberg. They said they see more governments coming to the ECB for stimulus, and they wouldn't be surprised if the ECB either has to extend beyond the March of 2017 deadline for stimulus, basically QE, or increase this, or do that or increase the size of QE, or do both. So things aren't looking too good in Goldman Sachs' eyes when looking at Europe. Jeffrey Gundlach of Double Line Capital, a big money management firm, he was on Bloomberg, I think it was. He feels there's a 30%, a little over 30% odds that the U.S. is entering a recession. The bond spreads put that at 44%, but you have to take that with a grain of salt because the gas companies here in the U.S. they've been getting decimated, so their yields on those bonds, those companies that are considered junk or whatever you want to call them, high yield, has affected that bond spread. So if you remove those gas companies, the bond spread is putting the odds of a recession in the United States at just over 20%, which is still higher than it would normally be, what you'd normally see when looking at something like that. What else did we get here? The Federal Reserve's Rosengren, he was out with some comments. He said December jobs was quite strong, but economy could be slowing. He said FOMC forecast rate path has downside risk. Data raised possibility U.S. growth may be slowing. He hopes economy improves so the Fed can raise rates. Growth must be at or above potential to raise rates, is what he was saying. He's in the camp of normalizing rates, and actually he even said that today as well. He said he wants the Fed to normalize rates. He didn't quite go as far as saying what we say, to normalize rates could be a good thing in the long run and create what's called good inflation. He didn't go that far, and he did say that there's a risk to the downside for the economy. So, but at least he's saying that he didn't say they should be normalizing rates because the economy is strong. I have to give the guy props for that. So let's get to our four trades. Pulled out 23.3 pips on a size adjusted basis. On a non-size adjusted basis, it was 102.2 pips. First trade you're looking at here is Aussie CAD. We were long this 99.395. Sold 0.99750 for 35.5 pips, or size adjusted 7.1. We had 20% of our normal size. Our target was the figure of 1.0, and it did reach it. I think we got a little impatient with this trade, but we took the 35.5 pips, so not the worst thing in the world, but definitely could have been better because it did hit our target there. Aussie dollar, we were short this from 0.70041. We had 30% of our normal size with this trade. Covered 0.69791, picking up 25.5 pips as it was coming in. You can see it traded all the way down to 69, about 62 or so. So we had a chance to maybe grab a little bit more, but we'll take it. We had a little bit more size than that first trade, so you have to be a little protective there as well. We booked that one. We still have an open trade in Euro Pound. We won't go over that today because we're still in it. A very small position though. New Zealand dollar, US dollar is the next one. This could have been a full scalp, except that we didn't have full size. We had 50% of our normal size, only because we were risking more than we normally do on a full scalp. A full scalp, we're going to risk 15, maybe 30 pips at tops. So we had 50% of our normal size long from 0.65707. On this big pop, we got out 0.65855. Traded all the way as high as 0.65, about 89 or 90. Again, on a full scalp or something that's close to a full scalp, you're not going to mess around. You're just going to grab whatever you can. The pop was so fast. Normally on full sizes, we're picking up 3, 5, 6, 8, 10 pips. It was so fast, we grabbed 14.8 and actually had a chance to grab more, but we'll take it there. And then pound US dollar. This one, unfortunately, we only had 5% of our normal size. We were piecing our way in because even though the trend is to the downside, we want to take it to the short side. We do not want to play a bounce. As this bounce was happening, our algorithm was telling us to short on the way up, but also to short in pieces. So we were going to piece it out and get 15% of our normal size. But unfortunately, we only got the 5% off at 1.44569. It started to roll over again. We had put a bid in to cover while we were not in front of the computers. And overnight, it happened around 2:30, 3 o'clock in the morning. We covered 1.44300, picking up 26.9 pips on that 5%, which is equivalent to 1.3 pips. And you can see what it did. It tried to make another bounce up to where we were short and then really rolled over early this morning, about 4, 5, 6 o'clock in the morning. So in the end, we'll take it 23.3 pips on a size adjusted and non-size adjustment 102.2. And we'll move on to tomorrow and tonight. So if you're still trading now, good luck. If any signals come out, they'll be coming your way. Have a great rest of your day, and we'll be back tomorrow.